Hello, everybody. Welcome to today's webinar brought to you by Bursa Malaysia. Today, our webinar title is Unlocking Investment Potential, a close look at market outlook and ETF strategies. My name is Shen Chu. I'm the moderator for this session. Now, before we begin the webinar, here is a disclaimer. Whatever we share in this session is only for educational purpose. So in no way that I give any recommendation for you to buy or sell any listed securities that we mention here. If you decide to make any investment decision, you're 100% responsible for all your investment risk. And today, we are very honored to invite the head of ETF and ESG investment from IV Cap Management in Berhad, Mr. Ong Sun Chong, to come to our session to talk about ETF and the market outlook. So allow me to briefly introduce our guest speaker today. Mr. Ong Sun Chong has more than 14 years of experience in fund management and investment research. He joined Value Cap Group in 2010 as Vice President of Investment Research. And in 2015, he was appointed as Senior Vice President and also the Portfolio Manager. In this role, he managed various investment portfolios across the Malaysian and ASEAN markets. Following the acquisition of IV Cap Management by Kenanga Investors Berhad in 2021, Sun Chong was tasked with leading the passive strategies and ESG investment. He has vast experience managing various local and regional funds, including ETFs, ESG funds, equity and balance funds. His other experience includes multiple roles in an investment bank and Big Four accounting firms. Sun Chong holds a Bachelor of Accounting from Multimedia University. He is also a fellow member of the Association of Chartered Certified Accountants and the Malaysian Institute of Accountants. He holds a Capital Market Services Representative license from the Securities Commission Malaysia for fund management. So welcome to this webinar, Mr. Ong. How are you today? You're on mute.
Hi, Shane. Thank you so much for your kind introduction. Very good evening, ladies and gentlemen. I'm very honored to be here today.
All right. Good to have you here today. Now, today, as our title suggests, like you'll be looking at two parts. The first part is market outlook. The second part is the ETF strategies to navigate the current market landscape. So I'm going to begin by asking you this question before we go into the market outlook or the ETF strategies. So let's first talk about what exactly is ETF and why should one consider invest in ETF?
So first of all, thank you so much for Bursa Malaysia for having me today. And before answering Shane's questions, maybe I just jump into a little bit background about my company. So I'm from IV Cap Management, Sanjuan Berhad, which is one of the ETF issuers, largest ETF issuers in Malaysia. And we are the wholly owned subsidiaries of Kenanga Investors, which is one of the fund management arm under the Kenanga Group. So Shane, like what you have mentioned about ETF, actually ETF is an investment instrument that are not as popular in Malaysia, although it is very common in places like US, Singapore, Taiwan, and so on. But in Malaysia, I believe most of the investors are not familiar, and some of them may not even heard about what ETF is. So I always like to explain what ETF is by taking the example or referring to unit trust and also shares, which are more commonly known. So like we all know that unit trust is an investment fund, is a pool of fund that probably have 20, 30 stocks in it, okay? And the pool of funds will then be divided into a smaller units, and investors can subscribe to the units and buy the unit trust fund, right? So imagine that ETF is also a pool of funds, but the unit itself is listed on exchange like Bursa Exchange, and it can be freely traded. It can be freely traded just like any shares. So in short term, in summary, it is a hybrid of a unit trust and also shares, and you can deem it as a unit trust fund that is listed. So more often than not, after I explain this, people will ask me the next question. So what exactly is the difference between unit trust and also ETF? So first of all, unit trust fund is mostly actively managed. What does that mean is that the fund manager of the unit trust fund will pick the stocks and invest, buy and sell whatever that they think that is can generate income, and they try to maximize the returns for the fund, right? So on the other hand, ETF is a passive managed investment instruments, whereby it is an index tracking fund. What does an index tracking means is that, for example, index, when we talk about index, maybe I just give an example that most of the people will be familiar, FBM KLCI, right? We all know that FBM KLCI has 30 stocks. So for ETF, say for example, if I have an ETF that on FBM KLCI, okay, so that fund itself will invest in accordance to the FBM KLCI's 30 stocks. The fund itself will consist of the 30 stocks, the same weighting as the index. So therefore, it's called index tracking. When the index up 1%, the ETF will up 1%. When the index down 1%, the ETF will down 1% as well. So just an illustration on pictorial so that easier for the audience to understand. So just now when I mentioned, I used the example of IFBM KLCI, but this is just another example that one of these index is called US Titan 50, which tracks the 50 largest Sharia stocks listed in US. So as you can see that they have Apple, they have Microsoft, and Microsoft 10%, Apple 9.9%, and all that. Okay, so in that index, so the fund will actually replicate exactly the same index into a fund, and the unit is actually traded on Bursa Exchange. So how do we buy unit trust? Unit trust normally sell by agents, right? And it will be charged management fee, and the buying and selling with always the investment amount is deduct upfront. When you redeem or when you sell your unit trust units, it generally take about 6 days, and they very often they will have a sales charge of 1 to 2%, right? And on the other hand, for ETF is a very low cost investment product. So what you can do is you can just buy on the Bursa exchange like any shares. It's as long as you have a CDS account, you can buy ETF on the exchange. You don't need to go through any agent, and as long as you have a broking account, the settlements is T+2, exactly the same like any shares. Of course, by trading it, you will need to pay the brokerage fees, clearing fees, and stamp duty. But just for your information, stamp duty for ETF trading is waived by Bursa Malaysia, because Bursa Malaysia is currently having a campaign to promote ETF. And what more important is that the management fee for ETF is typically very low and is below 1%. So this is just to share a little bit on the benefits of ETF, a quick one for beginners or audience who are not familiar with ETF. So first, of course, is diversification, because by just investing in one single instrument, you can have access to a pool of stocks. Depends on what are the ETF. Certain ETF, like what I mentioned, if you buy the FBM KLCI ETF, you will have 30 stocks. You own 30 stocks when you invest, and it is very low cost, like what I've shared. So easy access, as long as you have a CDS account, you can buy and sell easily. So it is very convenient and easy access. One very important benefits that we have in ETF is the transparency. When you invest in unit trust fund, you wouldn't know what the fund manager buy for you. So every month they will publish like the top 5, or if you're lucky, you will have access to the top 10 list holding for the fund, right? Whereas for ETF, it is the holdings for the ETF will be disclosed or announced on daily basis through the Bursa Malaysia's website. So you will know exactly what are the components and what are the weighting, and you can decide whether these are the stocks. You know whether is whether suitable for you, whether it's something that you like to own or not. You can make decision for through that, and it is passive. What I have mentioned, it is index tracking, so you no need to worry that the fund manager is not performing or whatnot, because if you believe in the index, you just trace the index and there's no element of stock picking, and you do not need to rely on the skill of the fund manager. So this is the beauty of it. Yeah. So Shane, yeah. So I believe I have briefly explained what are ETF and what are the benefits of investing in ETF.
So right now we learned that what ETFs are. So essentially it's like a mutual fund that is traded on the stock exchange, but it's low cost and it's passive investing that we are referencing the benchmark. So can you share with us what is the market outlook like for the local market, as well as the regional economy and also the market outlook?
Okay, so let me bring you through on the regional market first. So first of all, let us look at the global market first. Yeah. So global equity market, as you can see on the table on my left is the year-to-date percentage change. So as you can see, there are quite a long list, mostly are negative, because global equity market has been mostly retraced year-to-date October. Outperformers are US, Japan, Taiwan, while underperformers were Thailand, Hong Kong, and also China. Locally, KLCI and FBM 100 index were down 3.6% and 1.07% respectively, while small cap index increased by 6.3%. On Brent crude oil, it has up 1.7% year to date to $87.4 per barrel, and CPO has fell 2.3. CPO has fell 11.9%. Sorry for the typo. Whereas on the ringgit, as we all know, right, ringgit has been weakening 12.5% to 4.76 against the US dollar. Now let us look at the US first, because US is the biggest economy in the world. So while talking about the global market, we definitely will be looking at US first. So US stock market has been doing very well this year in year 2023, rebounding from a very sharp decline last year. Recall that last year, back in 2022, US market has been down a lot because of the US Federal Reserve, or in short we call Fed, hiked the interest rate. If you can recall, interest rate has been hiked from a historical low to historical high currently, and this year itself there are 4 times of high. And interest rate in US has reached 5.5%, which is the highest in 22 years. And come back to US stock market. The US market in March has a bit went through a bit of a turbulence, because caused by the Silicon Valley Bank's collapse. Despite there is a bank collapse, it sounded so serious, right? Bank collapse in March. The market actually just went down just a very short while, and it rebounded very shortly. This is because the investors are very positive that the rate hike in US is ending. So they are very positive and they are going in all out, and that pushed the market up. The information technology sector is the one that is benefited, driven by the excitement about AI and potential of a boom in the related technology. I will share about this part a little bit later. And of course, besides the technology sectors, consumer discretionary and communication services sectors will perform well as well. And looking at the economy of US, in the US, it has been doing well. It has been solid according to the Fed. Fed saying that in the last November's FOMC meeting, the Fed mentioned that U.S. economy remains strong, unemployment rate is remain low, and the banking sector is sound and resilient. So when now we try to look at this, what do you call the interest rate, the interest rate hike, right? So there are a lot of guess in the market that people are guessing when will be the end of the hike cycle. So according to Fed is very reluctant to commit when will be the end. But they just mentioned one thing, which is they always say this is data dependent. So when talk about data dependent, meaning which we need to look at the inflation rate. So on the bottom right chart, we can see that in the CPI or the inflation in US has dropped a lot from last year, which up to the level that the market, think that it is time for the Fed to start to stop the interest rate hike cycle. And in fact, the whole market is looking for an interest rate cut next year. On the bottom left chart, you can see that this is the market consensus of what the interest rate in US will be. Currently is at 5.5, and market is looking at 4.2 next year and 3.3 in 2025. Therefore, the market is actually looking at a interest rate cut. So now question is that there are still, despite the economic background or the number shows that US economy has been strong, but market is still concerned about the potential mild recession next year. Why is that? Why is that worry that happened? Is that because of global economic outlook is very weak, as you all may hear from the news and all that. China is facing a real estate crisis currently. Back in the European country, UK and Germany, which is the largest economy in the EU, is facing economic contraction. And what more important back in US, that their problem is that currently they are experiencing a very tight credit condition. So what does tight credit conditions means is that actually it's very difficult or it's very costly to borrow. As the interest rate gone up so much, if we look at this is the interest rate, the interest rate for the treasury, you can see that it has gone up so much, and it is very costly to borrow. And with the energy price gone up, it is putting a weight on the economy. And generally, when energy price up, it will follow by recession. And another thing that I wish to share also is that there are millions of Americans that will need to start paying their student loan or study loan after a 3.5 years of pandemic freeze. Similar to Malaysia, they have this study loan or student loan moratorium that's ended. So people will need to start paying. And trust me, back in US, their study loan is very, very expensive and very high, and it will definitely affect consumer spending. Last factors that I wish to share is this on the bottom right of the chart. This is the Federal Reserve Senior Loan Officer Opinion Survey, a very long name. But basically, this survey means that this survey is the survey for all the loan officers in the country, in the banking sector, that how willing are they to lend money. As you can see that the chart is very high now, is one of the highest in the history. And that, what does that mean? That means that the banks are very reluctant to lend money. When banks are reluctant to lend money, we know that economy will be affected. So this is just a fun fact. Yeah, I'm not suggesting, I'm not saying that definitely there will be a recession, but this is just a fun fact that every interest rate cycle, end of interest rate cycle, will come with recession. Back from 1970s until now, we can see that every time when interest rate down and it went back up, it will follow by the recession. So as we can see that, every time when interest rate go up, it will have, when interest rate go down, it will have this, what do you call, a recession. And we are now at the same situation. I hope this won't happen, but, God knows, right? Yeah, we remain to be seen, yeah? Okay, so I think we talked enough about US. Now let's go to other country a little bit. So let's look at the EU. EU, the ECB or European Central Bank has been lower down the projections, as what I shared just now. In the Europe, their economic conditions are bad. You can see that consumer spending are weak, jobless rates are high, and so on. And come back to the Asia, we look at China. China, surprisingly, quite surprised that the recent announced GDP, the third quarter, surpassed expectation. But having said that, their property market issues remain a very key concern that drag on the growth. And the local government start to issue, special refinancing bond, mortgage rates for first-time home buyer and second homes. And in order to maintain the growth target in China, especially in this background of a high increase in the youth unemployment rate, the China government is planned to issue a 1 trillion bonds in the fourth quarter this year to ease the local fiscal to ease the local fiscal difficulties and support the public investment. So closer to us, we have ASEAN. ASEAN is steadily recovering. Growth momentum is improving on the back of a stronger growth led by the external indicators. Growth is forecast at 4.2% this year and 4.6% next year. And on unemployment rate has declined sharply. As you can see in this chart, that this is the unemployment rate for Thailand, Malaysia, Indonesia, and Singapore. We can see that the trend is trending down, sharply down, unemployment, and real export has been trending up. This is also because of the continuing benefit from the production diversification. What does it mean by production diversification? Is that currently we have this US and China has this conflict tension that cause a lot of companies, especially the manufacturing companies, that shift away from China. And where do they go to? They go to ASEAN. And that's why this is what we call production diversification. They try to diversify away from US, away from China. And this is the situation. So specifically for Thailand, it is expected to be benefited from China reopening. Tourism sector is one of the very key sector in Thailand, and China reopening will definitely help their economy. While Indonesia will continue to present positive consumptions and FDI stories, and also next year will be their election, and the GDP is expected to continue to do well. So overall, we believe that in the longer term, overall, the equity market the global equity market will be supported by this AI investment cycle. What is AI investments in investment cycle means? Artificial intelligence, of course. So I'm sure most of you have heard or know or have been a heavy user like me on ChatGPT. ChatGPT is one of the very most famous AI that has launched last year. And you can see from this chart, my bottom left chart here, you can see that the total visitor from last year December of 0.2 billion user per month, it has grown up to 1.8 billion in just 5 months. Imagine the adoption rate of you can attract someone to use a product in 5 months time, 1.8 billion. That is how rapid the growth is. So as you can see on the top right chart, that from ChatGPT 1, GPT 2, GPT 3, and GPT 4, we can see that the computing cost has been increasing, meaning which every single question that you post to ChatGPT, there is a computing power behind it, right? They will do the computing and give you the answer, right? And the computing cost of it has been increased tremendously, as you can see. And there are a lot of processors are required for the server to run. As you can see, enterprise server, we can see here, enterprise server is only cost this much, and for AI training, that require the number of processor that you need in terms of dollar value is this much. So these AI stories or the AI trending AI trend that I believe is start to change the humans, how human beings do things day to day, and this also actually drive the investment cycle into invest into this area. And the RAM that we need for the AI server is 5 to 30 times more than a normal server. And the growth rate is so horrible. The growth rate is, we expect that it will grow at least 17%, from now until year 2026. And the beneficiary from this will be, NVIDIA, Microsoft, Amazon, you name it, you have it. It's the whole value chain of the AI. Just give a sense of how big the market size of an AI is, that you can see in the chart that, is expected to, by 2030, it will reach about 1.7 trillion market size, whereby currently is about 100 billion. So this is how our view on the regional market outlook and also review. Back to you, Shen.
Yeah, thank you so much, Mr. Ong. So how about the local market outlook? What is your view on it?
Okay. Talk so much about globally, regionally, and forget about ourselves, our own self, is it? Okay. Come. Malaysian market. Okay. So Malaysian market, generally we are, generally Malaysia economy has been doing moderate. Our GDP growth is decent at 4%, this 4 to 5% this year. Bank Negara expect unemployment rate of 3.5%, which is very decent. Our job market has been doing well. Unemployment has gone down. And on this backdrop, we think that potentially next year will be a better year for Malaysia equity market because of a few key domestic trends that I wish to share. First is the moderating domestic growth, economic growth that I have shared just now, and government policies that support growth. Recently, the government has announced quite a few key policies. For example, we have this new Industrial Master Plan 2030, which is a very big plan that a major plan that will shift our economy, create jobs for sustainability, and help to improve our income level and so on. So this is a very big plan. Whoever audience that is interested, you can just Google, you can see. And this is a very big plan. And the second one is a national energy transition roadmap that also launched this year. This is also a multi-billion plan that shift our energy, Malaysia's energy, to a more sustainable and green energy in long run. And also we have a 12 Malaysia plan midterm review, which we believe that the current government will put in a lot more initiative to boost the economy. We have also rolled out of key infrastructure projects. Given that the political situation has been uncertainties has getting better after the state elections and all that has over, the government currently can roll out more projects. There is a revival of 5 LRT 3 stations worth 4.7 billion, Penang LRT projects, Sarawak Sabah Link Road, 7.6 billion value on all these projects. We believe that will boost the economy and also the stocks market as well. On the plantation side, El Nino, there is a more than 70% chance of next year we'll have El Nino. El Nino is a weather phenomenon that is a very dry season next year, which historically is positive for our CPO price. So, and also next year we may have potentially strengthening of Ringgit Malaysia because of end of US hike cycle, when US start to cut interest rate, and we believe that US dollar will be weakening, and therefore ringgit will be strengthening. And also one key factors to note is currently our foreign shareholding is at a multiple year low. Foreign shareholding is only stood at 19.5% last year, which is the lowest since the global financial crisis back in 2008 and 2009. So this is the summary outlook that on the positive side. Of course, there are risks to our assumption here that what I shared just now, there are risks to my assumption, which is US recession. If US experience a very bad recession, then it will affect us definitely. Geopolitical risk, we know that there are a lot of war going around and all that, and that is not helping. And of course, the domestic political risk as well. So this is our view on the local market.
All right, thank you so much, Mr. Ong, for sharing your view on the local as well as the global markets. So we have understood better about the economy outlook and also the market outlook. So given that the outlook you just shared, so how should investors use exchange rate funds to invest in the current market landscape?
Okay. So good question. Of course, we talk so much about market conditions and all that, but the very key question, of course, Shane doesn't want to ask directly, how do I make money from here, right?
Yes.
Yes. Yes. Okay. So let us look at what I have mentioned just now. Hopefully, I wasn't too fast just now. Okay. So just a little bit of recap, back in the US market. So US market, the growth slowed down with a risk of mild recessions, but it could be offset by the change in the Fed policy, meaning which cut interest rate, which typically positive for the equity market. So what does that mean is that currently, if you look at the US market, if you ask 10 people or 10 investors, probably you will have 11 views. Why is that so? Is because there are people talk about mild recession. I heard a lot of people talk about hard landing, meaning which a very bad recession. I have people who think that next year cut interest rate, equity market will be very good, the market will boost. We have a very diverse view in the market currently for US market. So what does this mean? This means that this will be a very volatile market because there is no strong view. If imagine if everybody think very badly about the market, then of course self-fulfillment theory, the market will go down because everybody feel negative and they sell. So when everybody sell, market go down, right? But in this case, everybody has different view. So it will make the market typically when this type of market conditions or environment, what will happen to the market is market will tend to be volatile, will be up certain few weeks, down few weeks and all that. And that's what we can see in the current US market. So this type of market is good for trading. So how do we want to trade this market? Of course, there are many ways of you can do this. You can pick a few stocks and buy. What if you miss certain stocks? When market up, your stocks doesn't go up. When market down, your stock doesn't go down. Although you want to trade the so-called volatility in short term. So one of the easiest way for you is to buy a US focused ETF. Recall what I shared just now about ETF. ETF generally tracks the broad market. So when you buy when you buy an US focused ETF, when US market up, generally it will up, and when it's down, it vice versa, it will follow through as well. So in that manner, it is good trading tools for you, so that there's no concentration risk for you. And imagine if you only buy 3 stocks or 5 stocks, and when the overall market up, probably 2 out of 5 of your stocks go up, or maybe none of it. So in this case, for a trading tools, we think that a US focused ETF will be good for that. And please, ladies and gentlemen, I wish to highlight here, that stress the point here, that trade for short-term trading does not mean gambling, does not mean that necessarily means that you just don't do any homework, you just go into the market and just whack. That's not true. Short-term trading and long-term trading both are different strategy. It will still require you to do homework, have a view of why market go up, why market go down, and long-term, if market really goes down, what can you do? Are you willing to hold it for long-term or not? So US market, as what I have mentioned to you, that they are a lot of tech-centric. And for me, if you're tech-centric economy, given the AI cycle that is upcoming and ongoing, in long term, I believe the equity market, the overall market won't be as bad. Okay, so come to ASEAN. ASEAN, to recap what I shared earlier just now on the outlook and review, ASEAN is experiencing a long-term growth supported by production diversification, benefit from China reopening, positive consumption and FDI inflows. So how we can play ASEAN market? By using ETF. So what I would suggest, this is because we are looking at long-term growth, right? So for long-term, generally, of course, you can buy ASEAN-focused ETF to tap into the region's long-term growth. So you don't need to think which country I want to go in, whether Thailand is better than Indonesia, or Singapore is better, or Malaysia is better. You don't need to make a choice. You just buy an ASEAN-focused ETF whereby you have everything inside. And of course, when we talk about long term, we want to be more sure. And it will be good if we can have a little bit of income, dividend income. So therefore, a ASEAN dividend ETF may not be a bad choice as well. That you can gain exposure into quality ASEAN companies. So normally, dividend ETF is the ETF that have a high dividend stocks in the portfolio. And as you all know that, high dividend paying company generally, those are more stable, better quality. Okay. So last but not least, come back to Malaysia. As I have shared earlier, that improved market outlook driven by pro-growth policies, key infrastructure projects roll out, and also potential strengthening of Ringgit Malaysia. So how do we play this market? Is through by using ETF, is of course by Malaysia focused ETF. That is the simplest way. You don't need to stock pick. Easiest way to capture the uptrend. But of course, the catch is you must believe that next year Malaysia market is doing well. Yeah, then you can have your exposure there. And another instrument or another ETF that I wish to share here. This is even less people know about this. We have this thing called leverage ETF. What is a leverage ETF? Leverage ETF means that normal ETF is, if I get a Malaysia focused ETF, a normal ETF, it tracks the market. When market go up, it go up. When market go down, it go down, right? But leverage ETF, as the name suggests, it is a leverage. It has a leverage impact. So leverage, if it's 2 times leverage, it means that when market go up 1%, your ETF will go up 2%. And vice versa, yeah. If the market down 1%, you will lose 2%, so it will double. So this is suitable. This instrument is suitable for a high risk appetite kind of investors who do short-term trading. Like for example, you think that, whoa, okay, I think next month, Malaysian market is going to do well because of certain reasons. Government is going to announce certain things or whatever. Then you can play with using the leverage ETF. But ladies and gentlemen, I wish to share with you and also highlight to you a very important point, is that leverage ETF is an instrument for meant for short-term trading. It is purely a trading play, and short-term. It is not meant for long-term. If you hold a view of, say, I believe 12, 24 months, market will up, then leverage ETF may not be a very good choice for you. Okay, so besides that, I also wish to share, we talk about so much about long-term, you buy ETF for long-term, buy ETF for long-term. As we all know that, nobody in the world can time the market. None of us have a crystal ball. How I wish I have, but none of us have. So can you time the market? The answer is no. Nobody can really time the market. Long-term investment, how to be benefited or how to get a good return in long-term, there is only 2 ways of doing it together, of both things, which is to search for positive return and manage your risk, meaning which you get a return, and on the other hand, you try to cap your downside. That's how you can benefit, in long run. So how to do this? There is a way that there is a common or a proven way of doing this, which is based on the diversification and consistent participation, meaning which for risk management, you do diversification. You don't put all eggs into a single basket, so you diversify. So ETF will be a very good choice. Why? Because if you buy 1 or 2 stocks, maybe the whole, probably market go up, but your stock pick could be wrong, could be right or could be wrong, right? So by investing in ETF, which is a basket of stocks, you have diversification and consistent participation, whereby for long term, every single environment you go in and invest at different point, and in long run you will get the market average return. Let's look at this chart. This is the S&P 500 index for the past 10 years. A bit dated. This is 31st August. By now, the return should be much better. So 10 years total return 266%, not too bad. Annualized, meaning which every year, on average, every year, equity market return is 10.3%. So imagine if you buy at A point and you sell at B point, what will happen? You lose money. If you buy at B and you sell at C, of course, you make a lot of money. And you buy at C, at D, you lose money. At E, you make money back. So this is like a yo-yo. Market is always like a yo-yo. But for a long-term investors, we know that historically for the past 100 years, you can go and check equity market is always on uptrend in long run. So if I were to buy at this point, A point, B point, I buy, C point, I buy a little bit, D point, I buy a little bit, E point, I buy a little bit. So I pay like every 6 months I buy, for long term. What will happen is that I will eventually achieve what we call dollar cost averaging, meaning which I will get a average return as the market's average. So this is how we can position ourselves in the in long run investment. Okay, I think I better stop here and I pass back to Shane.
Thank you so much, Mr. Ong, for sharing with us what is the market outlook and as well as what are the ETF strategies to navigate in this market landscape. If you have any questions to ask our speaker today, you may write them at the Q&A box, right? Not the chat box, write them at the Q&A box. Now we have 5 minutes time for Q&A. So Mr. Ong, you have just shared with us the strategies in ETF, which is using the ASEAN focused ETF, US focused ETF, and also the Malaysian focused ETF, as well as a dividend focused ETF. So we have some questions from the audience today who ask, can you share with us some of the examples of the US focused ETF, ASEAN ETF, as well as the dividend ETF?
Sure. Okay. There are 16 ETF that is listed in Bursa currently. They are US focused. They have I think they have more than one, or if I don't remember, if I can recall correctly, there are two ASEAN ETF are available on Bursa Malaysia. For US, I think one Sharia based and they have another, yeah. So we do have. So I'm not supposed to promote any ETF today. So I may not want to share the name, but as you're interested, you can actually go to Bursa Marketplace website to look at the list of ETF that is available. Actually, it's not that many, only 16 choice that you have, but the 16 choice inclusive of US, China, Malaysia, dividend focused, Sharia compliant, conventional, leverage, inverse, commodity as well. So there are quite a lot of choice there. So you can the audience can go and look for it. Yeah.
Yeah, you can go to www.bursamarketplace.com or www.bursamalaysia.com to see the whole list of the ETF that Mr. Ong have mentioned. So we have like 2 funds in that invest in ASEAN and 1 in leverage as well. So yeah, you can check it out on the Bursa Malaysia official website. The next question is asking your opinion. Okay. Now we know that so the comment from Ang is that the Malaysia ETF market is illiquid and the spread is wide. Despite that, they are market makers. So what is your view on this? Is it true?
Okay, so the answer is true. Yes and no, actually. So I'm very sure that the audience, thanks for the question. From your question, I know you are someone who really invest in ETF. Therefore, you know about this. There are always market makers in the market for every single ETF. When you look at the ETF liquidity as compared to other shares that listed on Bursa, if you look at certain stocks in Bursa, if there is no traded, there's no trading for the past 1-2 days, it means that these stocks nobody will want to buy, nobody will want to sell. If you go to look at the bid and offer, probably you don't see anything there. But for ETF, it's very unique because every single ETF is required, the issuer is required to appoint market maker. What does this market maker, or we call liquidity provider, do? Is that every day they will put up bid and offer, both side, buy and sell both side, which is very close to the NAV of the ETF. So what Mr. Ang asked just now is that in certain days, yes, you will see in certain time of a day, you may see the situation that the spread is very wide. This is because for liquidity provider or market makers, their presence are not 100% within a day. This is because based on Bursa Malaysia's guideline, market maker guideline, a market maker is required to be present about 70% of the time. So therefore, there are periods that the market maker, in the absence of the market makers, you will see that the spread is very wide. You are not able to buy or sell very close to the NAV. But given some patience, you can just wait for a while and all that. And when the market maker come back, then you will see the bid and offer come back.
I see. All right. Thank you so much, Ong, for addressing the question. So the next question is from Brandon. So he's asking about my ETF, Dow Jones US Titan 50. So why is this ETF? Why does this ETF not have any indicative optimized portfolio value?
Okay. So good question. So optimized portfolio, or IOPV, we call is the real-time value of an ETF. So like what I have shared just now, that ETF itself is an investment portfolio, right? So it consists maybe, say, for example, 20, 30, or 50 stocks inside. So during the day, every single stocks that in their portfolio will move up or down. Every second it moves, right? So what are the NAV, or the true value of that portfolio, right? This is called IOPV. But for US Titan 50, the underlying shares are US listed, the top 50 US listed Sharia stocks. During Bursa trading hour, US is at night, so there is no trading of the underlying shares, and therefore there is no real-time movements in the NAV. Therefore, no IOPV.
So in other words,
I answered your question. Yeah.
Yeah, I think that is a good answer. So in other words, the investor can only refer to your to the My ETF website for the NAV, right?
Yes. So
right.
The NAV will be overnight, meaning which the NAV that we publish every day will be based on the last closing price of when US market close, which is about our 4 a.m. or 5 a.m. That will be the last traded for US, and the NAV will calculate based on that. And during our Malaysian trading hour, US market is closed, so therefore there is no movement.
Thank you, Mr. Ong. So let's do one last question since we overrun the session for a little bit. Now we have 16 ETFs that are available on Bursa Malaysia. So how should we evaluate these ETFs?
Okay, so evaluating ETF there are a few ways to look at ETF. First of all, of course, what are the tools? First of all, the easiest way is to look at the fact sheet to understand what are the underlying, or the index, what are the index is actually tracking. Some track US, some track gold, some track ASEAN, some track Malaysia dividend. Okay, so you can get the information actually from Bursa Malaysia's website on what all these ETF do. And generally to evaluate ETF, what you can do is you look at the performance, you look at the tracking error, whether tracking error is whether a ETF is tracking the index closely or not, and also the management fee. Generally, these are the few things that you will look at when you consider to buy an ETF. There is not much tools that you really need or any paid subscription or whatever. You want to know their constituents of what is inside each of the 16 ETF is very easy. You just go to Bursa website and the announcement is daily announcement. You can see what is inside. It's transparent. So if you ask me what are one single tools that you need to use if you want to analyze ETF, Bursa Malaysia's website.
All right, thank you so much, Mr. Ong, for doing this segment for us and also doing this very engaging Q&A session with the audience today. So, ladies and gentlemen, you just heard from Mr. Ong Soon Chong, who is the head of ETF of IV Cap Management in Berhad. Thank you so much, Mr. Ong.
Thank you, and a very good evening to everybody, and thanks for your attention and question. Thank you so much. Hope to see you all again.